And we are on. Thank you, Elvin, for coming on this Zoom. I wanted to kind of pick your brain a little bit because there's a lot of information and a lot of misinformation lately from some business owners that they're truly they're hearing certain things and they believe it to be gospel because hey, they heard it from this person, right? And they're doing things that are self-sabotaging, I think, when it comes to accessing working capital, growing or expanding their business. And one of the biggest things that you and I had a conversation about was personal guarantee. Okay, you have a successful business owner, semi-successful, or just starting off. What is it that? Why do you think so many people think that you can just come in there and say, hey, "I've been in business for 2 years. I should be able to get a loan, no personal guarantee, no assets. I don't want to tie it to anything. I'm demanding this. This is the way it works. Give it to me." And what do you think? Why do you think so many people believe in that you can get something without personal guarantee?
That's a great question, Kuko. As far as why do so many business owners think that they can get a business loan without some sort of collateral, right? And personal guarantee being something very common. And what I believe is that most individuals have experience when it comes to borrowing in the consumer borrowing space, where a lot of times a personal guarantee on the majority, a good percentage of Americans have a mortgage, right, which is secured by the asset, which is the property, right, or they have credit cards, or they have a car loan, and that's what the average American has. So they never really borrowed for something like a business, and especially if it's their first time, they may be extremely confused, or even like, oh, why do I? If it's a business, why do I have to be, tied to this loan? But
Yeah,
that's my opinion. I don't believe that it's any one theory out there, but it is something that is fairly common where first time borrowers are worried, or thinking that they can get without getting something for nothing, basically.
yeah, and I think it has to do a lot with a lack of financial literacy on the personal side too. I mean, we there's so much misinformation. Financial literacy is something that should be taught in high school, right before you go to college. It should be one of the first classes you take in college. But we hear so many people say, "Hey, I wish I knew this when I was younger." It's just misinformation, and it's not complex. It's not complicated. It's just those simple steps that nobody's really put on that path. You don't know that it exists, and so we see a lot of that on the business side. Another thing that we see on the business side is um, business owners. They do well, they do okay, and they forget to make a little payment here. Oh, what's a $30 payment on my personal credit card? And we've seen, personally, you and I have seen to where business is doing great, revenue is doing great, but your personal credit is in the dumps. Oh, it's not too important. Oh, that's something I'm more concerned about running my business. So tell us a little bit about what you see, like what kind of scores that you want to see on the personal, because your personal is your cosigner, right? Your business doesn't exist. It's kind of like when you're getting a car note, your first car, your parents cosign or somebody cosign for you, right? Your business is the same way. It's a brand new credit entity. Yes, you got your EIN, you can build your scores, but you need a cosigner. You haven't bought anything. Your cosigner is your social. And you and I have seen where people could just be cutting themselves off from hundreds of thousands, if not millions of dollars in access to funds because you can't even manage your personal. So tell me a little bit how vigilant somebody should be on their personal if they're starting a business, growing a business, or want to expand a business. Why is personal so important?
So, by the way, I love the analogy that you used there, as to far as you are the co-signer for your business, right? And that's the perfect way to look at it. Uh, so when we talk about personal credit, if you own a business, and even if yourself personally, for anything you're doing personally, you never felt like you had a need to be able to borrow financing at any level. Um, your credit, as the word that you chose, which is very unique and I love it, is you are the co-signer, meaning what? You need to be as strong as your business, or stronger financially in a position. And that is your credit score. So absolutely, you can have a multi-million-dollar revenue in business, heck, even hundreds of millions of dollars. And if you are the officer, the administrator who runs that company, the owner, and your credit score is in the dumps, you will not get a red cent or it will be, let me rephrase that, you're going to be taking expensive money or have very difficulties. You will miss out on opportunities if you own a business and your credit score is not at a level above 680. It should never drop below that. That is your golden ticket to be able to take advantage of opportunities.
Yeah, and
So
we've seen people have access to money starting a business. I have a particular client in mind years ago, just opened up an LLC the day before he called us. We were able to get him $112,000 in unsecured lines of credit. Most of those were no interest. And there's a lot of good ways, good money out there to start a business. People think, oh, I need $50,000 to start a business. It's not that difficult to get $50,000. And in some cases, there's no interest for 6, 12, 24 months. The gentleman got $112,000. Why? Because he has this massive, excellent file of personal credit. He had credit cards that were well over $20,000, $30,000 limits, never made a late payment. I don't think there was a single credit card that was less than 10, 15 years old. He had car payments. That shows that you are responsible, right? You are the co-signer for the business. And that's where you can start building business credibility. You start building a history, but you got to co-sign. And then you start building your EIN scores for your business. Now, I have seen you're not.
think about,
Go ahead.
I just want to add this for people, think about this, right? How is anyone going to trust you running a business if your credit score indicates how well you manage yourself, right? That's all that should be said to somebody is, I'm supposed to trust you running a business when I know you can't trust to pay your own bills on time. That is the reasoning that credit is the golden key to the door. Without that, again, when any client that I help, the number one thing, and Kuko understands that the number one question that comes out of my mouth is, how's your personal credit score? If it is below that 680, it's like, I don't care how much your business makes. I really don't.
There's some type of lenders out there that really don't care about the score, but you're going to pay for it.
Correct.
There's people out there.
Let's be clear that it's not that there isn't funds available to you. It's that those are the ones where you're going to complain. Most likely, it could put your business at jeopardy of folding. Just because you didn't know or you didn't think it was important to take care of your personal credit.
It's not that difficult. It's not that difficult.
My personal opinion.
Personal up.
In my personal opinion, more anyone who is any owner of a business should take care more of their personal credit than someone who's just a regular employee.
Okay. Back to personal guarantees. I know when people are asking for bigger loans, I believe you said it's anything over what, $500,000. There's very little chance that you're gonna be able to get that type of loan without any kind of personal guarantee. There's the SBAs, anything after a certain threshold, there's got to be some kind of asset tied to it, right?
Well, that's a confusing part there, where people get issues confused with personal guarantees and secured and unsecured loans.
Yeah, secured. I meant to say secured.
So this is the anything we specialize in a field that is not a lot of lending institutions specialize in. That is from 150,000 up to 350,000. We can get your business an unsecured loan, meaning the following. What does that actually mean? It means that you're not giving the lender either your personal home, your personal boat, any personal items against a default against that loan, meaning that if it defaults, you gave them the keys or you gave them equipment, you gave them something in order for them to take if you cannot pay them, right? That it's unsecured. Now, that loan is attached with a personal guarantee, meaning the following, that the bank can drag you to court, they have the right to do so, and try to sue you for the remaining funds that they are entitled to collect. That is a personal guarantee. Okay. You and any officers attached to with significant amount of ownership of the company.
Mm-hmm. Yeah, so if somebody is asking for anything above 350,
then it needs to be.
It just needs to be
secured by some sort of asset, and that can be equipment. That can be an actual building. That can be personal real estate. That can be anything. Again, that's an asset that has some substantial amount of value to it.
And I know this is a subject that we talked about. If somebody ties it to, let's say, a personal home, and now they're at the point where they do qualify for a loan, their revenue is doing good, doing. What's the process, or is there even a possibility to? I know you can't refinance property out of that secured, but if still, if it's even if it's if it's a different type of loan, for let's say from SBA to a conventional type of loan, you really can't refinance an asset out of those type of loans, right?
To the
To
best of my
to that,
knowledge,
yeah, they say, oh, now
at,
I'm doing good. I want to get my house out of this loan because that's what I used to secure the loan. I mean that what I find is that pretty much it's a no go because if it's secured, you need to pay off that loan
through
to
through the
release.
mature through the life of that loan, that asset is attached to that loan. There is no way until it's paid off, that I'm aware of. That doesn't mean that it's not possible and exist, for you to be able to remove some sort of collateral, from that note.
Okay. Yeah, I guess we see that all the time, and yeah, so anything about 350, you got to have some type of asset tied
Well,
to the business.
I just want people to be aware that for smaller deals, because I've seen people who have called me for things such as 150. I had a phone call the other day of a gentleman who, for $150,000, put up a personal property as collateral. That that doesn't need to be done. Again, that's opinion based. I personally myself, I would not do that. I would not put something that is not tied to the business as a collateral mechanism. Now, a personal guarantee, I have no problem with, but I would just not give someone access to something that is not related to the business, because let's face the reality.
Yeah.
The statistics are that most businesses will fail.
Mhm. Yeah. Now, tell me a little bit about. Let's talk a little bit about the SBAs right now because they're carrying a majority of the guarantee, right? So that's one of the big benefits with the EIDL, I believe.
No,
They say,
it's not. So it's part of the CARES Act that was passed back in December of 2020,
mhm,
where basically normal SBA loans are 75% guaranteed by the Small Business Administration, for a promotional time for 6 months that began back in February of 2020. 6 months going, any SBA loan carries 90% guarantee, meaning the government is guaranteeing 90% of that loan to the bank in case of a default.
okay, and so that went from 75 to 90%. So what's to a borrower, what's the benefit of that? And how do they see the benefit? Because it's still their loan, it's still they're borrowing it. So what is it? Is it better rates? Is it less requirements for these loans?
So basically, put it like this. Let's hypothetically say you took out an SBA loan and your business can't afford it and you defaulted, right? Under a normal loan, the bank can go after you, uh, to collect 25. They'll file
Okay.
with the SBA, but they're going after you for 25% of the money,
Mhm.
right?
Okay. Now it's
However, now they're going 90% and for 10%.
10%.
Also, the other thing is that right now banks are more willing to take more risk with certain files that they wouldn't underwrite, because they know that they're exposed to just 10% of that loan.
Okay. So less exposure to the banks, less
Meaning
risk to the banks.
some deals that probably wouldn't have gotten done, uh, can get done now.
Okay.
And so they're lowering some underwriting risk requirements, now, because again, they know that instead of 25% exposure, now they're only at 10% exposure.
Okay, so when somebody's applying, let's say at the original 75%, so they're looking for more ways to secure that 25%, right? Now that there's less required to secure that 10% gap. It's like a gap insurance almost that they want to.
Well, it's not. Again, the idea is that they're not trying to make bad loans from the very beginning, because that's not the intention. So I don't want people to get the wrong idea here. It's that, think about this. Let's go, you and I. Let's say that you loan somebody, but you know that I'm going to back you. Hey, Kuko, if that person doesn't pay you, I'm going to give you 90% of that loan back. You're willing to take more risk and lend to people who probably you wouldn't to, because you're like, hey, you know what? If this defaults, then I'm on the hook only for trying to collect 10% from that person. I'm going to get 90%. I'll be made whole up to 90% of that, versus before it was 25.
Yeah. Okay.
So the benefit that people are getting is that if you were a riskier business, you may get approved now than in the past.
Okay. Yeah, because sometimes it's that very thin line between getting approved
Correct.
and not approved. Because there's sometimes when we see files and say, hey, this should be a done deal, and then there's little hiccup, and everything else is so strong. Because there's a very thin line. It's really hard to say, hey, we'll get this done. It's really hard to say that, right? Because so many things pop up. What and I've seen like criminal records and things like that get in the way for SBAs in the past because of criminal records. So if you ever defaulted on an SBA before, or any kind of government loans, right? Maybe student loans, things like that. Is that going to be a difficulty for getting an SBA type of loan?
100%. The biggest one that we've seen that has caught people is FHA loans, which were federally insured, backed by the government. People who in the housing back in 2008, people who had foreclosed or defaulted on those loans, we have found that all those individuals have been deemed ineligible for SBA loans, because the government looks at it, you defaulted on the government-backed loans. I've seen some cases that also student loans where people have even co-signed, get this, where they have co-signed for their children and the loan would put in default, they do not qualify.
That's a big deal. You know, I've been in the personal credit bureau industry for 16 years now. And we have this saying, and we tell our clients like, oh, that's not mine. I co-sign for my children, co-sign for my friend. And I said, hey, have you heard that saying? No good deed goes unpunished. And we see a lot of student loan defaults because the kids never took care of it, or I've seen it where parents said, oh, I thought they were paying it for it. No, it's been in default for a while. So you're saying those kind of people are very high risk of ever getting another government.
Well, up to this moment, we have not seen any of them ever turn that around.
Yeah, so you
They
can't.
cannot. The word is they do not qualify up until this moment.
Up until this moment, so there's really no way of knowing. Hey, 10 years after, 5 years after.
Yeah, correct. The issues that we've ran into is that most people who had, let's say, issues with an FHA loan in 2008, they cleared the credit reports. It's not on their credit reports, and you don't know about it, and they probably don't think it was a big deal until they dive deep, and then it comes back and says, well, hey, you defaulted on, you foreclosed on a home on an FHA loan back.
You're seeing that now from 08, 09?
Correct.
10 years. Wow.
Correct. We actually had an issue once with a gentleman over 25 years. There is that will not go away.
Oh my goodness. So there obviously there's a lot of people were affected during the recession. I was in the mortgage industry back then.
Yeah.
So what do you see is the next best option for somebody to say, hey, this happened to me. This is not going to be an option for me. What other type of loans should they prepare for? What kind of terms can they expect?
Well, at that point, then you're going, conventional, and the conventional route, you're going to probably most likely have to secure the loan with some sort of asset, because remember the bank is no longer you no longer have that safety net of the government backing that loan. So the bank you're deemed now higher risk, and the bank's going to want you to insure it by giving them something, whether that is property that you own, or whether anything of substantial value can be used. So those are your options.
Okay. And one of the things also, it's good. Yeah, it's just good to start building some business credibility in the future. Maybe you can run it without having to secure anything. But we ran into an issue where personal credit's good, excellent almost, and then there's a glitch on the business credit. Now, no fault of their own, or maybe it is, but sometimes I feel, correct me if I'm wrong, I feel that it's better to have a no business score and have an excellent business score than and like that example, they had excellent personal score and they had a glitch on their business. The business just killed it. So in that situation, if he had no business history at all whatsoever, it would have been a much easier process, right, for the underwriters.
So yes, to go answer your question, absolutely, it's 100% better to have excellent personal credit than non-existent business credit versus having excellent business credit and horrible personal credit.
Personal credit is still always going to be there. Basically, is what you're saying.
It
It's
is
your call sign.
again, you cannot dodge the you cannot get around having it. I cannot stress this enough. If you own a business, if you have over, matter of fact, if you own over 20% or more of a business, your personal credit needs to always be above 680, at least if you're looking for financing, right? I mean, if you don't have no plans and you don't care, then, you know, whatever. But if you think, hey, I need to leverage, I need to borrow money to continue to run my business, your personal credit needs to be above 680. And that goes for all partners who have 20% or more of a business. I've seen scenarios where, hey, there's 4, there's 5 partners, maybe there's 2 partners. If one has an excellent credit score and the other one has a horrible credit score, guess what's going to happen? Can you guess what's going to happen?
Yeah,
There is no
everybody just
borrowing.
yeah, yeah. We've seen that to where it's a husband and wife,
Correct. Or
and one
yeah,
of them is
husband and wife,
excellent.
spouse, doesn't matter.
Yeah, the partners, right? And we see that kill the deal, even though one is actually the main owner because they're the ones running the business, and the other one was just on paper for whatever purposes. If you're what 20% or more, right?
20%.
or more. That definitely is going to kill any deal. We've seen that happen a lot. And the one benefit that I do see why people need to your personal credit, you need it to borrow money. But the main reason I believe is not necessarily for the funding and have access to the money to build your business credit score. That's not the main reason. The main reason is to keep personal and business separate. So one of the biggest things we see is contamination. So people are using personal credit cards to run their business and they max them out every month. And I've seen people lose well over 200 points maxing out credit cards. There was a mutual client of ours that she went from the 820 FICO score to the mid 500s because she maxed out her credit cards to run her business. That's the main reason we emphasize build business lines of credit. So those credit cards that you use for your business and you pay off every month, great. Let's not let it reflect on your personal, because then that's a catch-22. How many times have we seen people say, oh, I maxed out my credit card because I had a business issue or life event, but now you don't qualify for a loan because you're in the 500s because you maxed out these personal credit cards, catch-22. We'll pay those down, get back up to the 800s, then we can lend to you, but they don't have the funds to do that. And those bridge loans can be kind of risky. Well, get a short-term loan paid off and then your scores will go up. Well, there's no telling what else might pop up to get you out of those loans. And those are very expensive daily, weekly, bi-weekly loans. So the main thing I tell my clients, the business credit score is to separate it when it comes to the scoring system. Let the business report to the business. Yes, you have personal guarantees, but it's not reporting to your personal. If you max out $100,000 in credit cards on your business and it doesn't reflect on your personal, hey, everything's still hunky-dory over here. And now you need an SBA, great. You're in the 800 credit scores. It's not going to be a problem. So it's mostly about the decontamination, and we see that all the time.
I want to add to that because there's something very important. A PE, you could be, again, personally guaranteeing, let's say, that SBA loan, which you have to personally guarantee an SBA loan. That is not on your personal credit report. Mm-hmm. People ask me that question, hey, is this going to be on my personal credit report? No, that does not appear on your personal credit score. All a personal guarantee is basically, at its fundamental value, a core value, is that, hey, we're going to sue the business if this doesn't pay. And if we can't collect our total money, we're going after you then. And you agreed to that. That is what a PE is. Now, you didn't specify again, hey, take my house, take this, take that. That would all play out in court if the bank decides to sue you in court for the remaining. I've spoken with various VPs of banks, and they've said that they never think that the bank has ever sued anybody for the remaining amount that they're owed.
It's just, it costs more than what they're trying to collect.
Let's be transparent. Signing that, you do give them the right to do it.
Yeah. Well, it's a lot of good information, and we can talk forever. And obviously, we're going to continue these subjects. And when we post this on our social media, we'll put on there, hey, what subject, what questions do you have? And that could be a great topic.
We're just going based off a lot of things that we see that are common, that continuously pop up. And that's why Kuko asked me to do this. And I said, yeah, I mean, these are things that I definitely think that way too many times they continue to arise. So, let's just share and decontaminate some of the information that is out there.
Yeah, yeah. So, well, thank you very much for your time. Let's pick up on the next conversation on another. There's a lot of topics. So we have a lot of concerns about issues that
Yes,
people
there
have
is.
with their business, but it's something that we can definitely work on and just really educate the public. It's not that hard to have access to money. It's not that difficult to start a business and grow and expand a business. It's just there's no roadmap that teaches you on the financial side. You might be great at your business. You might be able to get business contracts and you're killing it, but financially you're running lean. You're self-funding, so you don't have working capital. You're not keeping to take on the next project. So that's one of the things that we want to educate, and that's what we're building. Is for you to have a healthy growth in the business, right? To have healthy
Correct.
expansion, minimize risk, and not ruin your personal credit along the way. Because what if your business is doing great now, you're ready to buy a house, but your credit score's on the 500s because everything's tied to your personal? No, no. Let's separate that. So reach
Yeah.
out to Elvin and I if you have any questions. Message us on social media. Elvin will be tagged to this video. Questions. Feel free to direct message us on any questions you may have. Well, thank you very much, Elvin, for your time, and
Absolutely,
we'll touch base again and have another great topic to talk about. Okay.
Yep. Awesome.
All
Take
right.
care.
Have a good one. Goodbye.
As well.